What is up, guys? Welcome back to my channel. My name is David Hamlin, aka the Laptop Legend, and in this video I want to talk about one specific stock that I think you guys should be watching extremely carefully, and I am going to be looking into buying some call options as kind of a YOLO for this stock. And the reason for that is I think it has the potential to see a similar squeeze to GameStop. And obviously the squeeze on GameStop is absolutely historic. We've never seen, well, maybe Kodak, potentially Kodak, but I mean, really, we've never seen anything gain quite the hype and momentum that GameStop gained. So I don't want to say that it's going to be on that level, but I think that because of the squeeze culture that is going on right now, where if stocks have a high short interest, a lot of people try to squeeze them. It happens. And I think this stock is a really good candidate for that. And because of that, I'm gonna be looking into getting some call options for it. For those of you guys who don't understand what a call option is, I will be explaining that in this video, so don't worry about that at all. But essentially, a call option is when you want the stock to go up, but you want to do it a little bit more leverage, because call options, if you buy one call option, it gives you the ability to buy 100 shares of the stock at a certain price. And because of that, it really leverages the amount of money that you can make in a less volatile stock. So this stock is not as volatile as the penny stocks that I trade. This stock is not going to see a 300% increase in one day. It's not going to happen. But if it sees a 10% increase or a 20% increase and you have calls, your calls could go up in value by 100% in one day. And that is where the magic starts to happen, because if you get a squeeze where there's a 50% move in one day, 100% move in one day, your call options could go up by 1,000%. Which is why they are so good for taking a YOLO. A YOLO obviously is one of those trades where you don't really have a good defined risk level, and you're risking a lot to potentially make an absolute ton of money. So that's what I want you guys to potentially consider doing on this stock, because I really think it could be cool. And yeah, I'm gonna be talking about the stock and why I think it has the potential to be a good call option investment, or you know, if you want to take something a little less risky, just buying the stock in general. So yeah, let's dive into my computer and let's talk the details. All right, guys, what is up? I'm here at my computer, and this is the stock that I want you guys to be looking into and considering call options for. Now, again, call options, if you don't understand them very well, let me explain why they are dangerous. If you buy a stock, you could hold on to it and it could go down in value for 5 years, but then eventually it pops back up and you can make money eventually. A call option is not like that. A call option has an expiry date. Expiry date? I don't know how you say that word. Eventually the call option expires, and at that point, if the call option is not in the money, it expires worthless, and you lost 100% of your investment if you hold it down to the expiring date and it expires worthless, if that makes sense. So because of that, call options are more risky, because you can't hold and wait for the stock to go back up, because they expire and they can expire worthless. So because of that, because they're more risky, they have a way larger potential for return. And that is why, for me, on a stock like this, it makes a little more sense, because here's where we are right now on the 3-month chart. And you can see it had some days where it absolutely went crazy, went from, $26, that was the low that day, all the way up to $62, 5 great green days in a row. And then after that, it just tanked, man. It could not make it out of this bounce for a long time. It tried. There was a couple days it tried to bounce, but it could not make it. And it fell all the way back down to below this support level. But then it consolidated and started popping back up, a little fade, pop back up. Now we're in a little fade, and there is a huge short interest in this stock. And I truly believe, based off the charts, that if we can get above this area here, right here at $62, no, I'm trying to draw a line. Come on, man. If we can get above this area right here at $62, this thing could really see a nice squeeze. Because if you remember, on GameStop, the all-time previous highs, I got to go to max, I guess. The all-time previous highs were right here at, I believe it was $63, if I'm not mistaken. Yeah, it was at like $63. And as soon as it broke past those levels, let's put on the 1-year chart. Maybe the 3-month chart. As soon as it broke past those 63, 77, that area, it went crazy. And you can see that is when it really turned exponential, because that is when the short squeeze really started to take over. And I know obviously there were options involved too, gamma squeeze because of a lot of call options, etc. But this is the same type of thing that we could see out of FUBO. And I don't expect FUBO to go from 60 all the way up to 500 if it breaks past that, immediately in a couple of days. But it could go on a nice little run. And if it doubles from 60 to 100 and you have a call option for like $75, that call option is going to go up so much in value. Like, I don't know the exact percentage. It might be 500%, it might be 1,000%. We'll have to see. But I mean, you're going to get a way bigger return on a call option, which is why I like it. It's the best for super risky plays where you're willing to lose everything you put in, but you want to have the potential for an extreme payoff. And that's why I like it, and that's what's cool about it. So now that I've showed you the chart, now that I've shown you the chart, let's go look at some of the reasons why I think this could happen. So FUBO TV is it's basically a streaming service, and it's still in the very early stages. I think they recently either they IPO'd or they recently got listed, or maybe it was one of those SPAC stocks. I'm not 100% sure because the chart goes back a long way. Looks like they did some reverse splits here. I mean, it goes back all the way to 2015. But when I was looking at the news, it looked like they IPO'd sometime in 2020. So I'm not entirely sure when they showed up. They just got on my radar recently. But basically, with everyone being inside because of the pandemic situation, their business model is proving extremely, extremely effective, and they are one of the most rapidly growing companies that is listed on the public market. I believe they are the 15th most rapidly growing company. Please feel free to correct me on that if that is not accurate, but that was the information that I found. And they just got into sports betting, which is big, obviously, what is it called? DraftKings, like all of those companies, they do really well. And here is kind of the big aspect of why this thing has the potential to squeeze. Because it has such a high short interest, and it just increased even more past what it used to be. And that's what's crazy about it. So again, GameStop, the reason that squeezed was because it had over 100% short interest. FUBO, you can see here, they talk about this. 2 days ago, the streaming sports service had the 6th largest short percentage relative to its float, 54%. So that means that half of the shares that can be traded, half of them are sold short. But then in just 48 hours, that figure increased dramatically. Earlier today, a managing partner, their short interest increased, and it's now 67% of the float. A 27% increase in 2 days, which means that's 2/3 of the float is short. 2/3 of the float is short. And again, the most shorted name in the US is GameStop, but now the second most shorted in terms of relative to its shares outstanding is FUBO. And again, having more shorts in the stock, puts it on the radar of Wall Street bets and puts it on the radar of people who are looking to get into more short squeezes. But again, it also creates the potential for a short squeeze because as the stock goes up more, they're going to have to cover some because they know what happened to GameStop, getting all the words mixed up in my head. But they know what happened to that, and they're probably going to have to limit their risk to prevent billions of dollars of losses. So if it breaks out past all-time highs, they're going to have to be covering those shares. And again, how do you get out of a short position? By buying back in. You sell short, and then to get out of the short position, you buy back. When you buy back, buying to cover, it pushes the price even higher. And that's how we can see these massive run-ups. Plenty of potential volatility. And again, I mean, you can see how volatile FUBO has been. All the way up from $13 up to $62 over the course of a month and a half. Or is that 2 months? A little bit less than 2 months. So, I mean, it has the volatility. The volatility is there. And with call options, that volatility gets leveraged even more. So again, call options are extremely risky. And I'm not saying you should ever consider putting something in that you can't afford to lose. Because if it fades back down, if it can't break this resistance, you're going to have an option expire worthless. And obviously, you can sell it to someone else and dump your position. But you can still lose a large percentage. With the potential for greater gain comes the potential for greater loss. And that is just how the stock market works. But because of that, you know, if this thing spikes past 62 and you have the ability to buy 100 shares at $60 and it goes all the way up to $100, I mean, you do the math on that. I can't do the math on that. What is that, $4,000? That's a lot if you choose to exercise it. And obviously the price of the contract is going to go way up because of that, which is why I like it. Disney has a stake in FUBO. And this is because, so they didn't make a new purchase, but they inherited the ownership when it acquired 21st Century Fox. So Disney has shares in FUBO. And again, you know, there's a lot of articles out there like this. You know, buying FUBO stock is like buying Netflix 10 years ago because, again, this is a very new company. It's still in the growth stages, and it has a lot of potential to continue to grow. And I think one of the main investors early on in Roku, I'm not sure if they're on the board for FUBO or they are a big investor in FUBO. I definitely need to do more research on that. I'm just trying to get this video out quickly to you guys. But they're in that. And if you look at that, look at the chart for Roku. Look where Roku was, you know, back in 2019, man. Right around these same price levels. And then what happened? Well, what's it at now? $400? Obviously, you know, there's kind of a red day in the market, but I mean, it's trading at $400 now. I wouldn't expect FUBO to reach those levels in a week, but it doesn't have to if you have a call option. That's what's cool about it. And yeah, I was trying to find the exact source. I heard it somewhere again, so feel free to do your own research on that. That might be inaccurate, but I heard that FUBO was the 15th fastest growing business, publicly traded business. And I mean, they have a really, really incredible growth rate. I think it's like an 80% revenue growth rate or something like that. So, I mean, the fundamentals have the potential to be good for a growth company, and it has the potential for a short squeeze. And if this can get on the radar of Wall Street bets, we could see a really, really nice move out of this stock. And again, if you have a call option, you don't need that much of a move to get a huge increase in your call option. So consider looking into it. That's all I'm going to say. I hope this video helps. If you made it to the end, if you found this video helpful, please smash the like button. And yeah, I got nothing today again. Well, I'll put this on my nose. I look like Pinocchio. There we go. That's your surprise for today. That's the cap on my lava lamp. For those of you who are wondering. All right, that is it for today, guys. I will see you in the next one. Until then, you know the drill. Let's grow better together. Preguntar, bebé, dime por qué te mientes. No puedes esconder todo lo que tú por mí sientes.